Morning, everybody. Welcome back to the Opportunistic Trader. It is just after 10:30 on December 17th, and we're joined by Tracy Shuchart. She's an independent trader up in Canada. She's always in our chat room displaying interesting charts, interesting thoughts, and different ways of looking at the market. And she is joining us today to take a look at what are the best setups out there. How's it going, Tracy?
All right, how are you doing?
Good. Interested. Last time we spoke, showed us a number of different themes you were looking at, which were really interesting. And one of them was you were looking for equities lower, which we have seen. You were one of the charts you were looking at was S&P to trade below 2,500 and then retrace back up into year end. We have moved lower. I'm just wondering any update to that, what you're currently thinking, what's changed?
Yeah, okay, so last time we were talking about this HBN here, and we did, in fact, bounce on that HBN, and I said, we talked about kind of, where I think it goes if it bounces on this HBN, and I said we could either go back to the breakout at 26.29 or possibly come back up and hit this triangle. So we did actually retrace quite a bit, obviously, but we never made it over the triangle and never made it over 2,700, and we, again, rejected from there. Currently, we're bouncing on the apex of that HBN at around 25.75. It went a little bit lower, but and I kind of got a buy signal at 71 at intraday, which is good for 20 points. And we got to 25.91. It looks like we're retracing a bit. So my view still has not changed on this whatsoever. I think as soon as we start getting below this HBN at 25.59 area, I think this could speed up quickly down to, we talked about that 24.55 support area.
Interesting. And, after we spoke, the market did rally back up. In this higher volatility environment, how do you, I guess in a way, how do you execute on some of your thoughts? Because things are very volatile. It might move 50, 70 points in your face, whereas a few months ago, let's say 25 points was a big move against you. So how do you adjust for that?
So I've been, you kind of have to, Larry was kind of talking about this too. You kind of have to have a little bit wider stops. And if I'm looking for, say, a certain move, instead of going all in on a move, you can scale in to a move if that's kind of what you're looking to do. Otherwise, the other way to do that is, I saw the market say bounce from this 85 back to 29, and I thought it would reject from there. Then I would probably have a fairly tight stop on that, and then my next try would be, because I'm looking to go short, and my next try would be, up at the top of this triangle. So you can kind of play it either way, or you could have scaled in, every 20 points or so into a move here.
So looking at the chart here, do you think that we should get back above 2680, or is that kind of the level that if we got back above there and held for a little bit, that would say kind of negate what you're looking at the moment?
Yeah, absolutely. If we kind of traded back up into this area, but again, I'm not really bullish this until we're over 2,700.
Yeah, okay. So over 2,700. Okay.
Over 2,700, I would start looking on the long side.
Gotcha. Now, looking at an even longer term chart, what sort of levels might we be looking at if things do turn ugly with China and with maybe federal FOMC policy starts to impact things?
If things start really getting ugly, definitely this 2,200 area is interesting to me, and this S2 again would hit another trend line that we have down here.
Because I'm sorry to interrupt. The one thing that's interesting is even your level right now, which seems 2450, it seems like a far way off. It's down 5%. There, in a typical year, we oftentimes go down 5-10%, and have 20% net change gyrations from high low. So it really isn't that far away. And even where we are right now, we've had a large sell-off, but we're down small on the year right now in the S&P. It's really not a large move.
Right. You have to, I understand. We were so coiled tight. If you look at this, up into, those highs up into, 29, 2900 area that we rejected from, and 2947, I think, or something like that was the high. I mean, this was so tight, right? So, and a it's bearish wedge. So, to fall, as coiled as we were, as tight as we were, down to 2400 is not really, it's not really a giant move in the broad scope of things.
Yeah, absolutely. No, I agree 100% with you. And remember last year, 2017, the story of 2017 was the low vol grind up, where we had very few days that had a larger move than 0.5%, let alone I think it was a record amount of days that were under 1%. And so we just were grinding higher. And now in the past, February was a volatile month.
Here's 2017. I mean, we were straight up.
Yeah, but not just even the straight up. It was just straight up, 6 points a day, 5 points a day, 4 points a day, then 10 points a day. Very, very small volatility. And February we saw that sort of washed out large vol, and then chopped around for the next few months in decent sized ranges. And then more recently, over the last few months, volatility has returned. So what other asset classes? Taking a look at crude now. What do you find interesting looking at that?
Crude.
I was pointing out, and I'm just looking up the crude. Feb crude, we're trading 50.60. I was pointing out earlier in the AM call that we twice last week tried above 53 and it was sold, and I was interested in seeing if we could hold a bid in the afternoons, because we had not been. And here we are, we're down 85 cents, trading near the lows of the year on a closing basis.
I mean, so far we kind of talked about this last week, where I said, we're kind of in this, this range right here that we had traded before over here. And this was 2016, last time they cut. We kind of traded in this range for 3 months. Now, I'm not expecting that to happen again, but I wouldn't be surprised if we spent December kind of in this range, give or take. I mean, OPEC stance was, it's going to, obviously equity markets going away on crude prices as well, but it's still holding up relatively well comparatively speaking to, say, the indices. So here, again, I think that we're still trading within this range, and then, perhaps see a broader sell-off down to this 42 next year in Jan, Feb that tend to be weaker months.
So Jan, Feb tend to be weaker month seasonality-wise?
Yeah, usually, I know throw a seasonal chart up there, but usually December we see an uptick because U.S. crude production starts tapering off due to taxes, because December 31st is the assessment date for crude stocks. So they kind of want to pull back, they want to drain as much as they possibly can. So they kind of cut back on production. And we generally also start seeing draws within the market because refinery maintenance season is over. So again, I think that's, December, usually we see an uptick. I think we'll probably spend December kind of, flat again in this range.
That's an interesting looking chart. And just so people, in case you can't tell, this is a 10-year chart, if not even maybe 11-year chart. And it's interesting, this, like you were pointing out, this kind of 40 to 50 level, there's a lot of support in that level. That said, it looks like we could kind of test in those 40 levels, especially if we can't trade higher in these in this general time frame. Is there any specific trade that you might look at, or any sort of levels, like if we rally back up to 54 that you'd look to sell, or if we trade down to 47?
Definitely. I mean, I think right now, if you're trading in range, you can trade, you can, like, especially at least intraday, you can, these levels are pretty tradable. I mean, 50.31 has been holding now for, I open this up a little bit, we've been holding this area. So, your risk reward for trying along in these areas are, at these levels, with a fairly tight stop is, pretty reasonable. If we got, and again, same thing, if you got up to this 54, 55 area, I think 55 is going to top this. I think that would be a great short. If we could get back up there heading into the new year. So I think, you can play this range really well. It's actually a lot easier to trade than, when we're just trending down or trending up.
Yeah. And then last week when we spoke, you were talking about the Canadian dollar, but you didn't have a chart at the time. You have that now. The Canadian economy is one of their largest exports is oil, so they're very tied to how oil prices trade. They actually had a disappointing housing number come out today, as did the U.S. But dollar CAD, which I look at, is trading at 133.90, pretty much on the high of the year. Tell me, what do you see when you look at this
Right.
chart? This is the
So
Canadian future.
this is the Canadian, this is futures. So this would be opposite. This would be CAD USD. If you're a
Right.
Forex or if you're a pairs person. So, I mean, basically we have a very minor support right now that we're kind of sitting on. However, with everything going on in the Canadian economy, and not just oil prices, but everything else that's going on, I'm looking for it to trade down to 70 eventually, into next year. But, uh, medium term, I should say, instead of longer term, just because of all the weakness. And, I think it's really easy that we could trade down into, this level. So any rip, I would be, looking to sell down into this 73 area. And I think that, I think overall, you could trade CAD weakness against pretty much any DM currency at this point if you're trading pairs.
You might look to even buy euro, sell CAD, or buy yen, sell CAD, that sort of
Right, exactly.
thing. Also taking a look, I guess, at some of the metals. You were talking about gold and platinum.
Yeah, so
Taking a look at interesting times.
let's go to platinum really fast. So platinum has been very weak, obviously. We are sort of in this buy zone, right? But we've kind of been here 4 times. That's kind of like a quadruple bottom. So I wouldn't be surprised if we kind of I think if we slip down below this level, anywhere from say 700, 725 would be a buy, because what happens is when it keeps bouncing off these levels, what happens is you finally have a washout, and you have these institutional sellers waiting just below the market in order to buy. And everybody's getting long here, right? Because it works X amount of times. So everybody wants to get long here. Everybody wants to get long here. What happens is people stocks get hit, and then institutional investors are kind of hiding under here. So if we slip below this area, I think that you could get a really nice buy setup for platinum.
How long is that? Oh, so that's a really long-term chart. That's going back about 15 years.
Yeah, it's a very long chart.
And then what's the liquidity like in platinum in the futures market?
So it's actually, it's not bad at all. I mean, it's very tradable. And you can kind of tell it's the RSI up here. If you're looking too, not that I'm a huge RSI fan, but this has we can dip below here, which would take us right to our area where we've got these institutions waiting, hiding.
What does that RSI chart tell us? Because that looks pretty interesting. It looks like RSI has actually moved up, despite the fact that it's trading near the lows here.
Yeah, I mean, it did move up. This portion kind of moved up again. This is a longer term chart, so this is, from December. This is moving up from whatever months. When is this? 9, 10 since September.
That's really, when you bring up some of these longer term charts, it really gives you a lot different perspective, and it really shows, multi years of ugliness there.
Right. I mean, it's definitely the weaker metal, but I do think, I was going through charts, and, I think this could be a really nice setup again, if we come down into, 700, 725 area, which seems far away, but it's not that far away.
Absolutely. What about gold? Interesting levels here. Last time you spoke with us, you had an interesting take. You were looking at possibly gold higher and dollar higher.
Right. So gold again, we were talking about what a beautiful technical setup this was when, it broke up, hit resistance, came down, retested. Now we're doing the same thing. We broke up, came down, and now, Prior resistance is now support, and we're moving higher. So, again, a beautiful technical move in gold.
And what's the time frame on this chart that you're showing?
So this is a daily chart. Gold, yeah, this is the daily chart.
So what would you be looking to do in gold here, and where would you look for tradable levels?
I think that, obviously this is, holding a support now. So, if you got to pull back anywhere into this area, I think that's, a great place to go long. First stop I would be looking for is, this 1272 area, and then, possibly into this HVN. And then kind of see what happens. I think it's possible that, we could move all the way back up into, near 1300. Again, I would look to sell that area. And that would be like right here.
Distance up there.
But yeah,
gold's been trading more supportive, but volatility's been really low on it.
Right. It hasn't really moved, right? Since last week when we talked, I think it was exactly the same place.
And even on the year, it's the past 6 months. We had that one dip below to like 1165, and that was mostly an overnight move. It was really daytime, more of 1190 to basically this 1250 level where we've been, basically the same.
Right. So then that kind of brings us to the dollar. So this is dollar index DXY. Again, last week we were talking, I said, I would careful shorts. This is a very bullish pattern. If you wanted to be short this, I would wait till it broke, retested, and came down. Even though I'm bullishly inclined, just kind of a warning to short. What we did happen, we did have a break. We retested this triangle. We came out last week was a full candle outside. To me, that's very bullish. We are, a little bit weaker this morning, but again, we're still outside of that triangle. This is still a bullish scenario to me, and 99 would be the target on that. And then when I was talking about gold and dollar moving up together, what I meant was, if you look at the August 16th low, 2018, I think gold was 11. Where were we? 11. Where were we? Of this year. There we are. So gold was 1167 at the low, and the USD high that day was 96.69. So right now we're at, trading at, 40, 43, 45, 44. And USD is still trading higher, even though we have a little bit of weakness on the day. We're in 9,700. So in fact, they are moving up together.
Yeah, no, it has been. And it's an interesting little spread trade. Those two typically are moving opposite directions. It looks like we're at really interesting levels in a lot of these charts that you've shown us, whether it be gold, crude, dollar, S&P, and we have the Fed coming up this week, and then we enter a quieter time in the market. But then, it's the new year where there's always interesting opportunities, people putting new capital to work and looking for new themes. So it should be interesting to see, especially like this dollar wedge you're just pointing to right here. It's an interesting coil, and that's another market that really hasn't moved much. I am starting to hear that the sentiment for next year is with the Fed hiking now and then probably putting on the brakes, that a lot of banks are looking for dollar weakness. So very good. It's going to be really interesting over the next few weeks.
Yeah, I definitely agree.
Any other thoughts or any key things you're looking at this week? I know we have the Fed coming up this week, but is there anything you think is setting up as a really good short-term trade?
So, I think there's opportunities everywhere in all these markets and the short-term trades. Again, I would be looking to sell bounces in CAD, buy USD on dips. Again, crude's range bound. I think, you can pay the outer edges of that really nice. And, again, I think that bounces in S&P should be sold.
Sounds good. All right. Thanks for the information, Tracy Shuchart. A lot of great information there. Beautiful look at some of those charts. Thanks, and we'll speak to you soon.
Okay, thanks.